I know. Good afternoon, guys. It's a little bit early. I have to run out of here in a little bit for a quick meeting, and I don't know what time I'll be back. Market's sitting on its lows here. The bonds leading the way down. We made the slightly higher highs this morning. Of course, I was getting stopped out at that point. Should have been jumping on a short at that point. Call those levels. We were looking for 16 plus 17. We got up to what, 15 plus? That's close enough. Bonds, I was looking for 144.06. We got to 144.03. Remember how when trends, the market will often fall short of resistance levels or pull up before you hit support levels. And we're seeing that kind of a trade. Now the market's working its way lower. It's been tough. Oh my God, it's been herky-jerky. Rally, big bids coming in at every level, but the market nevertheless is working its way lower here. 5-year auction came off decent, okay, I guess. I would have gave it a C plus, B minus. I never did hear what Ricky called it, but it's on my way to the 7-year in the FOMC meeting. I still think we're seeing long liquidations in the market here. Look at some of the bond ETFs. We're not seeing the big selling on strength flows in the Wall Street Journal type of activity in the bond funds, but look at the price action. Pull up HYG, the high yield bond fund, the junk bond fund. HYG is the high grade bond fund. Sorry, it's not the high yield. LQD, they're all getting hit. TLT's holding up a little bit better, but I think it's just a matter of time here. I think we're going to look at some serious new lows. We have highlighted that the market has had, what looks like the third wave of the fifth wave down. If you got the charts that my subscribers got yesterday, you want to be selling rallies here still. We're holding a little bit here. 131.04 plus is 618 retracement of the rally that we saw from yesterday's lows to this morning's highs, and that's kind of an important level, but the bonds have already taken that level out, and I think the bonds are going to lead the way down here as the curve steepens. Sell rallies, that's all I can add here. We'll see what the FOMC brings tomorrow. I don't think it's going to change anything. You might hear some more chit-chat about the Fed guys that are protesting about doing QE. They had their opportunity to protest by voting no, and I don't think anybody voted no against doing QE4, or maybe one guy did. And then, they talk like, oh my God, we shouldn't be doing this. Oh, well, you are doing it. You're going to continue to do it, and I don't see the bottom in sight yet here. I think we're going to see some lower prices going through next week, and probably into the week after that when we see the next bond auction. Okay, see what happens on a retest of the lows. That's the key level here. If 10 years can rally back up towards 9 plus 10, I'd put another short on there. And I think if we can get back up towards 15, 17 on the bonds, I'd put some shorts on there. What time is it? 12:40. You might have a shot at it. We're going to see what happens here as we're probing the lows right now. Any kind of high volume trade through yesterday's lows is probably a go with trade. We're looking at some significantly lower support levels once we take out yesterday's lows. The next big cluster I think I was looking at on the 10-year is down around, what are we looking at, 130.18, 130.20 area. Remember we were talking about on the 10-year, the big C equals A targets on the way down, 130.18. Bonds have already exceeded those levels, but still, as the bonds are leading the way down, you can use the 10-year support levels as good support levels or areas where to cover your shorts in the bonds too. Have a great night, guys. We'll see you tomorrow.